Alright guys, so the US-China economic war is getting worse, and this time the US has overreached bigly. Now beware the second order effects of such a move. Slapping a 10% tariff on China is one thing, supply chains can readjust to that, and it would be the US consumer that hurts more. Restricting semiconductor exports to Beijing sounded smart as well. But what have we seen? Huawei developing their own competitive chips, while Chinese startups, they are creating powerful AI solutions for the world. And it was done at a fraction of the cost. And now Trump, he wants to raise the stakes. This is perhaps the most dangerous move that will hurt China today, but doom the US tomorrow. Trump just told the US economy not to invest into China, to curb US spending into Chinese companies, especially in technology, energy, and other strategic areas. Not only is trade decoupling, so are capital flows. The US wants to ring fence investment money away from China. And make no mistake, the definition of national security will definitely go beyond these sectors. It might be chips and EVs today, but sooner or later, it will spread to other industries like plastic, chemicals, and even toilet paper. Investing into those would be a no go. Now, is this smart? I don't think so. But what we think doesn't matter because the United States is going full steam ahead. According to the White House, China is exploiting our capital and ingenuity to fund and modernize their military, intelligence, and security operations, posing direct threats to United States security. As a result, Trump is going to get radical. Here's his new plan. We will also adopt new rules to stop US companies from pouring investments into China and to stop China from buying up America, allowing all of those investments that clearly serve American interests. We are witnessing a big financial decoupling between the US and China. Trump wants to stop China from investing into the US economy as well, plus, he wants US companies to stop investing into Chinese firms. But is that really the smart thing to do? When US companies invest into Chinese firms or partner with them, they don't just get a financial return. You get to tap into the latest technologies, Chinese expertise, and all the technical know-hows. That's an area where the US has a big knowledge gap. This isn't safeguarding US innovation, it's stagnating it instead. And why do you think Trump was so keen on buying TikTok in the first place? This upcoming ban literally makes no sense. But let's talk about the consequences. Will China's economy take a hit? Absolutely. In the short term, this isn't good news for Chinese companies, and we can immediately see it in the stock price. As a result of the hit, Chinese stocks started to plunge. E-commerce and tech giant Alibaba took a brutal hit of 10%. That's a big sell-off. It's also possible in the future, Trump might ban US investors from buying into China's stock market directly. And if things get bad enough, this would be a clear avenue to squeeze. And whether we like it or not, what Trump does has a tangible effect in the real world. He might be operating in a twilight zone, but his words can swing markets. There's a reason why Trump wants to squeeze investment money into China. He realizes that Beijing is competing hard with the US in technology, and in many cases, they're starting to catch up. Microsoft, for example, is cutting AI data center spending thanks to the shock from China's DeepSeek. There isn't much need to spend billions to develop AI solutions, and this caused an epic market correction in the US over the last few days. As a result, Trump is pissed. His grand plan is to raise $500 billion to boost US domestic investment. And the last straw was when Apple partnered with Alibaba to use Chinese AI in their iPhones. Now, I don't know about you, but this felt like a slap to the face of Trump. It completely unwinds his Stargate mission to build US tech dominance. It's not a coincidence that Apple did a 180 and moved to add 20,000 US jobs. Trump's tariffs are a clear threat, and Apple made the ultimate pledge, spending $500 billion, half a trillion, domestically in the US over the next few years. Now, this looks good for Trump, but it is far from ideal for Apple. Their profit margins will get squeezed, and for US consumers, if this continues, be prepared for $3,000 iPhones and iMacs that cost 10 grand. Trump wants US companies to decouple from China's economies at all costs, even if it hurts the consumers back home, and that's the grand strategy at play here. But is China going to collapse tomorrow? And it's really important we separate facts from fiction. Just like how the Russian economy was supposed to be a smoldering ruin from all the G7 sanctions, right? China will diversify away from the US economy.
So you say that China is better prepared for a divorce with America than America. What do you mean by that?
Well, China has long been preparing for less exposure to the U.S., diversifying in all ways, not just in terms of trading partners, investment, but also currencies and payment system. And whichever president comes around, that plan hasn't changed. In fact, the first time around, the Trump tariff wars have set off this complete globalization frenzy among the Chinese companies. 80-something% of them have already implemented going abroad plans. Global trade has actually expanded. China's position in the world as a share of global exports has actually risen compared to before, while U.S. is declining. So I think China's response is, while U.S. is kind of going back, they're going to open up as much as possible. So this is why Premier Li has repeatedly said unilateral opening up, zero tariffs on the least developing countries. We should not underestimate the degree and the pace of fragmentation that is happening, multipolarity, and the rise of economic blocks. We're already seeing the data, whether it's investment or trade, the non-aligned blocks with the aligned blocks and their interaction with each other. If you go around the world, you're asking the likes of Brazil or ASEAN countries, what are they saying? The same thing, diversify. Don't be at the mercy of the dollar or the US financial system.
China has a plan, and they won't be exactly helpless if the US pulls away their investment dollars. There's a classic doom and gloom narrative about investment money flowing into China, that the world is divesting away from Chinese industries. But the key question to ask is why? This chart shows record investment flows out of China into other countries approaching $200 billion. That's in yellow. But remember, these are Chinese firms building factories and plants in other countries. They are expanding. Meanwhile, we can see inbound foreign investment into China collapsing, and it does look like the end of the world. But why is FDI near zero? It's because domestic competition between Chinese companies alone is just so competitive. It's basically the Hunger Games there. Investing into China without a game plan or an edge is just a bloodbath. Hope is not enough. And in this economic war, I want us to focus on the different strategies the US and China use. Now, Trump loves to impose financial and trade sanctions. And this can be trade tariffs or restricting investment flows into China. But China can always sell to other markets. The US consumer market is not the only game in town. However, China's plan is quite different. Beijing weaponizes supply chains to choke critical minerals away from the US. They make the input so expensive to import for US companies, and that drives consumer inflation up and makes US exports very uncompetitive. China could ramp up their critical resource export bans to the US. Now, they have done it with gallium, they've done it with germanium, just to name a few, and that will hurt US semiconductor production. Now, in a fabulous report by Inside China Business, this export ban could extend to titanium as well, and this would most certainly destroy the robotics industry in the G7. While the US has financial control, China has supply chain dominance. That's the big difference. Production and refining capabilities are mostly Chinese today. China accounts for a third of raw titanium production in the world. But when it comes to the refined input for industries, titanium sponge, they account for 216,000 tons or 67% of global output. Once again, Chinese industries are the biggest consumer of titanium as well. So Beijing can impose an export ban to G7 countries and squeeze the US economy as a result. Now, this will drive up the cost of making advanced robotics, which is a very big lifeline for US manufacturing. It's perhaps the only avenue left to stay competitive, especially against China. So there are big differences in strategy. Trump might think that he has a full house, but China might just have a straight flush. Commodity punishments might actually hit harder. Now, there are a multitude of ways China can retaliate without hurting their own consumers. China's economic and diplomatic tools are far more refined. They understand the mechanics of tariffs. Unless they are the world's major producer of something, there's no point to counter tariff the US. The US is undergoing a very risky transition today, especially when it comes to the federal government. Trump is shaking everything up.
Because we have people that don't show up to work and nobody even knows if they work for the government. So by asking the question, tell us what you did this week, what he's doing is saying, are you actually working? And then if you don't answer, like you're sort of semi-fired or you're fired, because a lot of people are not answering because they don't even exist. They're trying to find, that's how badly various parts of our government were run by, and especially by this last group. So what they're doing is they're trying to find out who's working for the government. Are we paying other people that aren't working? And, where's all that? Where's the money gone? We have found hundreds of billions of dollars of fraud so far.
Now, the game plan of Doge is simple. Cut away wasteful spending, which is a good thing. But ask yourself, why cut now? Because the US financial system can't withstand the strain of more borrowing. It's as simple as that. In a Twitter post, even Elon knows the truth. The true measure of success is US bond yields, the bond markets. And as he said, the bond markets do not currently reflect the savings I'm confident we can achieve. And that's because the US government still spends much more than Doge can cut. And that's why traders are selling and shorting US bonds. They expect inflation to go up and yields to go even higher. Now, we can't underestimate how big of a burden the US debt has grown to today since the pandemic. And with Trump's new tax cuts coming, government revenue is going to stay low or even drop. The interest payments alone are an epic nightmare. They are approaching 20% of total federal revenue that includes taxes. So for every $100 Trump brings in, almost $20 goes into paying interest on the debt just to service the payments. The 10-year yield also isn't helping things. It's bouncing between 4.3% to 4.7%, and at one point it almost hit 5, which makes borrowing new money very expensive. It compounds the debt burden even further. So without a doubt, this is a weak point for the US economy. That's why Trump imposing punishments after punishments on China isn't a wise move. He's doing it from a position of weakness. And guess what? China can absolutely retaliate. Why won't they? They can put additional pressure on this very delicate situation. China's holdings of US treasuries have fallen to the lowest level since 2009. They are dumping US debt like no tomorrow. Beijing is also convincing the world to de-dollarize. And as the world continues to save their money in other assets, this is bad news for the entire US financial system. Not just US bonds, but the stock market as well. Now, as we speak, the US markets are crashing. The S&P is down by 3% in 3 days. A big correction might be here, especially with Donald Trump escalating his trade war. So if you think this confrontation with China is over, it's time for a wake-up call, guys. We aren't even at the main event yet. The main course is coming right up. According to the executive order, more brutal shocks are lined up for Beijing, which is crazy. Just listen to this. Auditing Chinese companies further is one. Imposing port fees for Chinese ships stopping at American ports is another, but it gets worse. Trump is going to arm twist Mexico to punish China. He wants to push the Mexicans to impose tariffs on Chinese imports. The plan is to squeeze every facet of China's economy, and the US isn't ashamed to use other countries in their trade war. So I want us to sit back and take a big breath. We might have avoided nuclear Armageddon with the Russians, but the economic storm is getting bigger and bigger. Trump wants to bring US manufacturing back. That part we understand. However, it's going to take some time to fix the mess organically. It's going to take 10 or 20 years to actually fix the entire situation. But Trump's trying to speedrun everything by imposing a global tariff war. However, beware the consequences. This might crash the US economy first before reaching the promised land. And don't expect China not to retaliate as well. But let me know what you think. What else does China have in store for the US? And will they cut away more imports in the years to come? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.